Looking out across the North Sea on a windy April day, as you can imagine, I've been asked lots of questions about what happened in the Suez Canal and how that affected international trade and how it continues to affect international trade.
So can you tell us a bit more about what would happen when there is a major disaster declared with a ship at sea?
So what is not really readily known is that international marine law is so old, it's hundreds of years old, and it actually says that freight is payable, vessel lost or not lost. So in the case of a major disaster, ship owners can declare what's called general average.
And what is general average to the layperson who's just booked some cargo on a ship and given it to a shipping company and asked them to ship it for them? What would it mean if a shipping line declares general average?
So general average in layman's terms means that the owners take a general average value of every piece of cargo on board the vessel, divide it by the number of pieces of cargo on the vessel, and that's your share. Remember, freight must be payable, vessel lost or not lost, and all people putting cargo on board the ship are required to insure the vessel. So if a vessel has a major disaster and the owners declare general average, the people shipping the cargo, they pay.
So you're saying that the shipping line could declare a general average and that they would take the average value of all the cargo on board the ship, including, for example, my box of personal effects, which is perhaps not worth very much at all because I'm just taking my own goods from one home in the UK perhaps to a home abroad. But I could then be responsible for a much higher amount because the overall value of everything on the ship is higher than my personal effects are, and I will have to pay a percentage of that. Is that correct?
That's absolutely right. And if you take all risks cargo insurance, your general average and your total loss insurance is already included. But it's really important that you take marine cargo insurance. Don't just think you've given it to the shipping line and they're responsible. Under US COGSA rules, the shipping line is only responsible to pay you a maximum of $500 and you may still be hit with a general average claim. And under Hague-Visby, it's 2 SDRs per kilo. 2 SDRs is a tiny amount of money. So please take marine cargo insurance, even if it's only general average or total loss, because it's really important that you insure your goods. Remember, international marine law, freight is payable, vessel lost or not lost, and all people who put the cargo on board the ship, they are responsible for paying for any damage to the vessel under the general average.
And that applies to me, even though I'm just the customer. When you say all people who put the cargo on the ship, me as a customer, because my cargo is on the ship, could be liable for a percentage of the loss.
You will be liable for a percentage, not could be.
And tell me a bit more about marine insurance. What if I think I've got marine insurance, but I don't know if I've got all risk or if I've got general average or if I just insured my goods? What would the choices be? What are the options that I could choose from?
So there's lots of companies offering insurance, and what we suggest to people is ask out. You want an all risks, zero deductible marine cargo policy. Okay, that means all risks, anything that happens I'm insured, and zero deductible. That means if my cargo gets damaged, there's no deductible. They don't say, oh, the first $5,000 is you, zero deductible. And for good quality marine cargo insurance, you're going to pay about 1% of the value of the goods, including the freight. So it's a small amount to pay for peace of mind.